Hello, and welcome to another episode of the Wenalyze webinar, Insurance is all about data. In this third episode, we're going to talk about how to use open data for process automation. And I'm highly privileged to have one of the best possible speakers for this topic, who is Juan de Castro, Chief Operating Officer at Cytora. Juan, how are you?
I'm doing very well. Thank you, Roger. It's a pleasure to be here.
The pleasure is mine. Juan, I think it's important to give some context and understand why would you be one of the best possible person to talk about this topic. So can you tell us about what is Cytora doing in the insurance industry and what are you doing at Cytora?
Sure, definitely. So Cytora is the configurable platform that enables commercial insurers specifically to create digital workflows by digitizing, evaluating, and routing risks. So how do we do that? What we do is we digitize every incoming risk to an insurance company. Often those incoming risks come in the format of an email with attachments from a broker. What we do then is extract the key information from those risks, augment those risks with additional data sources. Then we evaluate those risks against multiple rules, including appetite and priority that are configured for every client. And then we route those risks to downstream systems for either automated or manual underwriting. And we are the leading player in this space. We work with some of the top global commercial insurers, such as Allianz, Markel, Beazley, HDI, etc.
You mentioned you use open data or additional data. So when we talk about this topic with insurers, we usually find a lot of skepticism around. But I think you and I believe that open data is necessary in this industry. So why do you think open data is necessary to be used in commercial insurance?
Yeah, so I remember when I was back at Hiscox, our former chairman, Robert Hiscox, would always say that to analyze or underwrite a risk, the only three things that mattered were who's the client, who is the client, and who is the client, right? So to some extent, like all the other information about the assets of the client, etc., obviously it's important. But really to understand, is this a risk you really want to underwrite or not? It is all about understanding who the client is. And even forget about digitization for a second, right? If you just shadow a commercial underwriter, they already use all this data to analyze who a client is, right? So they would go online, they would go to the company, to the client website to understand what they do. They would go to often to Google reviews to understand the reputation of the client. So underwriters already use a lot of this data. Often it's not captured anywhere, which is a challenge we can talk about. But that data is used to understand, is this a client you want to underwrite or not, right? And I think that is the first key decision point when underwriting a risk is, do you actually want to have that client in your book? Then obviously to get to the right pricing, you might use obviously other data points about the assets of the client, which will be only in the information the broker has submitted or the client has submitted, like sums insured and assets, etc. But the first decision, which is this a client that you think it's quotable? It often depends a lot on data that is pulled already from existing sources or from external sources. So then this is a behavior that exists already. So I think the only evolution that is then required is, how do you formalize that through digital workflows, right? Is that information you want to capture? Is that information you want to standardize? Is that information that you want to have rules against to assess, is this the right client for you?
Yeah, I think indeed underwriters are familiar with this type of data already. I think the skepticism sometimes is around how to capture or how to automate, because obviously there's some risk in there. If you automate a process, there might be an automated mistake, and we cannot afford to have that. So in that sense, my next question is, how are you using in Cytora that type of open or public data?
So probably we are using it in 2 or 3 different ways. So probably first and foremost is just to mirror the data that underwriters are already using to analyze a risk, and that goes from retrieving flood scores from commercial third-party providers like a JBA. It can be getting financial information from providers such as Moody's, right? So the first area of using external data is about taking the existing data sources underwriters already using and automatically pulling that data to be able to automatically analyze a risk, right? So if you think about the current processes, underwriters would receive information from a broker, then manually would pull all this data and then would make a decision on the risk. The first thing Cytora does is automate that process. So extracts all the relevant information from the documents provided by the broker. Well, we actually first go through a process called entity resolution, which is translating the client name into a unique ID, right? And we follow different techniques. In the UK, often we translate it to a company registration number, which is like a unique ID in the UK, but we also use IDs from other providers like Moody's or DNB, right? So extract the information from the submission, then resolve to unique IDs. And then once we do that, we can automatically pull all these third-party data from the set of data providers underwriters are already using. So I think that is the first use is automating a process or a behavior underwriters are already familiar with. I think the second one, we can go back into each of these buckets in a second, but I think the second one is about providing the underwriter with further intelligence on the risk. And one very, let me just, to bring it to life, give you a very specific example, right? So often one of the things brokers ask a client when helping them get quotes is what's a sum insured, right? What's a sum insured of the contents of buildings, machinery, etc. And to do that, the client needs to know what is the cost of rebuilding the premises, for example. And to be honest, often clients don't really know how to make that assessment.
They
right?
don't have to.
Exactly, like that is not their core business. So they often just make an estimate. And I think we statistically know that that's more often wrong than right? So the second kind of area of value is how can you use third-party data. So one of the things we do, for example, is we from the footprint, number of floors, construction materials, etc. We use third-party services to get to an evaluation of the rebuild cost, right? So that is information that can be provided to the underwriter to understand any risk of underinsurance based on the sum insured provided by the client, right? So that's more supporting tools for the underwriters to understand have the assessments of the sum insured been done correctly or not. The third area has to do with what we call inferred data. So it's data that often, and I know this is something that Wenalyze, you guys focus quite a lot on, but is the best example of inferred data is analyzing the client activity, right? Is often, again, the broker would provide a paragraph with what the client does, but you need to be able to map that into a classification. Often it can be SIC codes, it can be NAICS codes, it can be the insurer's own activity classification, right? So that is data that is not readily available from any single data source, but it requires providers like you guys to do the mapping from client activity paragraph into an activity mapping. And the fourth one has kind of probably the fourth area of kind of where we use data, kind of external data for is other information about the client that is not provided by the broker, but is meaningful to understand who the client is again, which can be things like Google reviews, right? So what's the reputation of that client, right? Because obviously, especially in liability lines, there's a strong correlation between the reputation and the management of the company and the propensity to claim. Or like health and safety indicators, or in the UK, use of HSE data to understand like what's, again, liability related. So liability risk related to health and safety considerations. So only by pulling all that data, so which is kind of data directly available from third-party sources, is inferred data, is data from kind of who the client is. Only by pulling all that data together is when you can make an accurate analysis of, is this a client that is within your underwriting appetite or not, and then also inputs for the pricing model.
So I think describing in that way, it sounds like a very complete solution, and it will be hard for an insurer to say, I don't want that type of solution. However, I guess that as we also do, you have been facing a lot of challenges when implementing this type of solution. So what are more or less the main challenges that you guys have faced when implementing this in a carrier?
Yeah, I think there are probably two areas or two hurdles to overcome. The first one is easier to overcome. The second one is often more challenging. So the first one is automating the kind of the sourcing of external data underwriters are already using. So often we face very little challenge with that. Obviously, underwriters are already using that data to make underwriting decisions. So it's more about proving the accuracy of being able to understand who the client is and pulling that third-party data into an automated workflow. So often that is quite straightforward. It has obviously efficiency benefits. It has benefits around making sure that the insurers capture and store all the data related to a given client. So that is often how we start with most of our clients, right? Because of the second challenge, right? Which the second challenge is, okay, how could you use new data or new data sources to evaluate risks? And obviously, the challenge is bigger, right? Because you need to convince underwriters and actuaries that the data is accurate, that there's a correlation between that data and loss behavior, right? Which rightly so, right? So the underwriters and actuaries need to understand whether that's data that is really useful to make an underwriting decision. Our approach has always been and is always start with data underwriters are familiar with. So when our clients are thinking about deploying digital risk flows, is don't surprise underwriters with new types of data day one, right?
Yeah.
But they start seeing the benefits of automatically pulling that data into the risk that they are analyzing. The manual activities reduce significantly, and then you get the underwriters on board with the concept of pulling external data automatically into the risks they're looking at. Once that's done, then we work with our clients on, okay, the second phase is how do you start identifying new data sources that can be relevant to analyze a risk. But that's already reusing an automated workflow, right? You could even start by adding that data on those data sources automatically to every risk coming in. But some clients choose not to show that data to underwriters in the first instance. So just capture that data, store it, so that then the data analytics and actuaries have access to measure the accuracy and the correlation between that data and loss behavior. And then once they feel more confident, about it, then you can start exposing that data to underwriters. So that is our strategy in terms of how to add new data sources into the underwriting workflows.
I think in that sense we're completely aligned. I think it's the very smart move, and the tip here is to phase out all the process, saying, okay, we have familiar data we use every day, and then we have data that we haven't used before. So if we start with data we haven't used before, then the skepticism is very high. But if we start automating processes with data we're all familiar with, and with data that we are going to use in our everyday basis, then it's easier to, let's say, open up our minds to use other alternative data. And I think in any type of data analytics solution or automating solution in the insurance industry, what makes sense is to make different phases and always to start with most familiar sense or the most familiar step you can do. And once that's done and it's being used, then we can add on top new things. So I think I'm glad to see that we're aligned, and I think it's the best approach.
Yeah, and definitely it is. I think most of the key of the success is about change management, right? It's about getting the underwriters comfortable with the data, understanding where the data comes from. So just potentially a couple more things to say about how do you what are some of the things to do in that transition towards newer data sources. I would say one is it's always show the underwriter where the given data point has come from, right? Because often underwriter will be, okay, like, is this data point coming from the broker? Is it coming from elsewhere? And that is actually quite important from a legal responsibility of the underwriter. They need to understand where the data has come from. So that's the first one. The second one is also avoiding overloading the underwriters with too much data, right? Because I mean, on one side, machines price more accurately with the more data they have, but it gets to a point where underwriter there's too much information to be able to analyze a risk. So that is often where we work with underwriting management to understand like what data points you want to show the underwriter to make a decision, and what data sources or what data points do you want to keep in the background as an input to pricing models, but the underwriter doesn't need to look at them.
Yeah, no, completely aligned. And I think in that sense, it could be interesting. Can you summarize more or less what are the benefits that you have seen in carriers when using open data?
Definitely. So probably a few different ones. So one is at the most basic level, it is about efficiency, right? It is about removing all the effort underwriters need to do to pull data from 10, 15, 20 data sources, right? So if you go back 3-4 years ago, underwriters would go to 5 different websites to pull data to analyze the risks. So you just altogether just remove all the time spent on those manual activities that provide really, really little value to underwriters. So one is efficiency, but alongside that is underwriter experience. So, right, so in a world where underwriting talent is quite scarce, and most insurers have difficulties hiring good underwriters. Underwriters want to work in an environment where their underwriting experience is best, right? So they don't want to work for an insurer where they have to be doing all these manual pulling of data day in, day out. So it is actually helping with the recruitment. If you take the kind of risk digitization and the use of data sources to the next step, which is obviously once you've automatically pulled all that data about a risk, you can start suggesting to the underwriter whether a risk is in or out of appetite, or is it more or less attractive, right? So you can still start steering the underwriter to the right risks. one thing we're saying is that the onboarding period for new underwriters gets massively shortened, right? Because you're actually helping the underwriter understand what's the appetite of the insurance company he or she works for. So it's efficiency, it's recruitment, it's onboarding, and then you get into the probably the even more interesting one, which is about risk selection, right? So if and it creates a very strong competitive advantage to use external data, right? So if you have more data about a given risk, you can be much more granular in your risk selection. So two risks that for an insurer that doesn't use that external data might look very similar. Another insurer that augments the risk with external data will find differences and correlation of those small differences with loss behavior. So then your risk appetite and risk selection becomes superior. So over the midterm, also the loss ratio improves. So to be honest, we see efficiency gains, we see recruitment onboarding, we see loss ratio improvements also, and ultimately we also see growth, growth acceleration, and then that's driven by two things. One is by pulling all that external data automatically. As I said, you reduce the underwriting effort to quote a given risk. So underwriters can quote more risks per day. So GWP by FTE increases, and which accelerates growth. But there's a compounded effect that then, given that data is pulled automatically, the quote turnaround time also reduces.
Correct.
Right? So underwriters are being able to get back to brokers with a quote within a day, and that is something that we are enabling with our clients. Is especially like in mid-market commercial, is getting back to the client to the broker with a quote within the day. And as we know, there's a strong correlation between turnaround time and conversion rates.
Correct. Yeah. If I'm a business owner and I'm quoting in 5 different insurance companies, and one of them answers in one day, and the other 4 take 1 week or 2 weeks. Obviously, I do need insurance already, so I'll probably prioritize the one that responds quicker. And we've also seen a strong correlation with those answering period times and the closing rates. I think there's one thing you mentioned before. I'd like to add something. When you mentioned risk selection, I find this example very interesting to explain it. So we've seen cases where the information the insurance company has about 2 businesses is the same, right? So they're quoting 2 restaurants, let's say Spanish restaurants with 15 employees located in a similar area. So in that sense, those risks look very similar. Now, if we add these alternative data, for example, we're adding Google reviews, right? We see that one has 5 stars out of 5 with 10,000 opinions, which means that everyone wants to go to that restaurant, and it's going very well. And we see the other one that has 3 stars out of 5, and the last reviews are bad and talk about bad hygiene conditions, for example. We do have now a new and different view of the risk of that restaurant, and we now have reasons to price those restaurants differently. Maybe before in the previous underwriting rules, they had a similar risk. But now with this alternative data, we know better the risk, and we can rate and price differently. I think as one question before the last that I have, you've mentioned how there are different phases, there are different benefits, and I'd like to take this opportunity to ask you, what benefits do you see when partnering up with other startups, and especially with the partnership with Wenalyze? I think it's interesting to explain to the audience how we complement each other and how we make each other stronger.
Yeah, definitely. So first of all, I think the example you made is spot on, right? It goes back to the point about who's the client, and having more granular data to separate two risks that look similar, but that might have very different loss experience. In terms of like how do we partner with data providers like yourself, and specifically startups. So 2 points there. One is so Cytora provides a risk digitization workflow, but we don't manufacture data ourselves, right? So we've got a data marketplace where we have partnerships like with you guys, and we go to clients and we offer the infrastructure and the risk digitization infrastructure, and then we seamlessly embed data like Wenalyze data into the underwriting workflows for our clients. So that is our partnership model. In terms of like specifically startups like Wenalyze, I think because we also partner with large data providers like in Moody's or things like that, right? Startups are often, by the nature of a startup, at the forefront of cracking the most challenging problems, right? And then one specific use case that is how our partnership with you guys started was about understanding client activity. So understanding client activity has been a historical challenge for the industry. Actually, it's a human challenge, right? So right now, if you present the same risk to two different underwriters, most likely they will classify the industry code differently. So that is one of the kind of use cases that you guys offer, which is okay from the business description, from the information about the company, from the company website, can you map that to an industry code? And often you find these solutions in niche providers like Wenalyze.
Correct. Yeah, I think if you're providing such a complete solution, let's say, you can divide it in very little steps. So having someone specialized in each of them to help is key and very important. Just to wrap up, Juan, there's one question we always ask, which is, what will be your top recommendation for a carrier that is watching this webinar in regards to using open data?
I think it has to do with a lot of what we've been discussing, right? Is the use of external data needs to be handled with the underwriters' adoption as the number one priority, right? So is follow a very incremental approach. So start by automating external data sources that the underwriters are familiar with, then start providing more and more value with newer data sources once they are comfortable with the operating model, right, of technology providing information about the risk, even if not all of it comes from the broker, from the client. So that would be, I think, that is something that, as I said, that we suggest to all of our clients, and it's proven really, really successful.
I agree. I think in every technological innovation data-related project, the first and the best thing to do is to start with a familiar aspect of it, and then we will do new things in the future. But if we can do the things we already do, but better now, I think that's the best way to go.
Definitely.
So, well, Juan, thank you very much for joining us today. It was a pleasure. I think we have a lot of interesting insights. And, well, I hope to see you in a new episode very soon. Thank you.
Thank you, Roger. It has been a pleasure joining you. Again, obviously, it's a pleasure also to speak into the European audience, but in particular the Spanish audience, which is also both of our backgrounds.
Of course. Un saludo a la audiencia española. Thank you, and we'll see you in the next episode, probably next month. Thank you.